Hello, everyone, and welcome to our webinar, E-commerce Sales Tax Basics for Growing Sellers. My name is Jasmine O'Keatsey, and I'll be your host today. If this is your first time, welcome, and if you joined us before, welcome back. I'll review a couple quick notes before we dive in today. Friendly reminder that today's discussion is for informational purposes only and is not legal or tax advice. On your screen is our safe harbor policy, so please take a moment to review. We are recording today's event, so if you want to listen again or share it with a colleague, you'll receive the recording within the next 24 hours. And the console you're looking at can be customized, so feel free to move or resize the windows, and the additional resource section contains the slide deck and other related links. There are several ways to engage with presenters and fellow attendees today. So first, please submit any questions you have for the speakers in the Ask the Questions box. Feel free to submit any troubleshooting questions there as well, and we'll help you out. Second, you can join our attendee chat by clicking the icon at the bottom of your screen. We encourage you to introduce yourself, network, and discuss today's topic there. We are offering 1 CPE credit for today's presentation. So for those looking to receive CPE credit today, please note that you'll need to respond to at least 3 poll questions and be present for at least 50 minutes. Once you have met CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Your certificate will also be available in the post-event email. So let's meet today's presenters. We are joined today by 2 Avalara experts. We have Christine Martin and Clay Goodhue. So Christine, feel free to introduce yourself first and pass it on over to Clay, then go ahead and take it away for today's discussion.
Awesome. Thanks so much, Jasmine. I'm Christine Martin. I'm one of our senior solution consultants. I spent 15 years in industry as a tax manager before I joined Avalara. So I bring the functional side of the world over to the technical space of Avalara.
Love it. And my name's Clay Goodhue. I have spent the last 13 years at Avalara helping companies navigate the wonderful intricacies of sales tax, and most of my time has been spent specifically with a lens on our e-commerce vertical. So, between Christine and I, hopefully we'll be, educational, fun, informative, all the like today. And here is what we are going to be talking about. So if you want to learn all about e-com and sales tax, you're in the right place. We're going to start with a little bit of a look at the e-commerce landscape today. We'll just sort of level set on sales tax basics through the lens of e-commerce. We'll talk a bit about the key challenges for growing sellers, how automation supports scale, give you a little sneak peek about what's next in the series, and we'll leave some time for Q&A at the end. I always, Christine and I have done a number of these over the years, and I always think it's sort of important to level set on, like, why are we here? What are we talking about? Why is it important? And why, for the love of goodness, should an e-commerce seller bother themselves to learn about the world of indirect tax? So let's take a little trip down memory lane here and just, again, kind of ground ourselves in why is this even important? Why do I need to be thinking about this? Why do I got to spend this next hour with Clay and Christine, if not to just get a CPE credit? And it starts with that top bullet, which is like, look, states rely heavily on revenue from sales and use tax. So, Avalara exists, companies care about this because the states care deeply about it. And so we start there, and as we talk about the e-commerce landscape today, I'll take us back on kind of how we got to where we are in some things that have changed over the last, 8-10 years that are really specifically sort of catered around e-com companies. So if we look back, prior to 2018, there's this world that existed in which, for the most part, e-com sellers worried about physical presence. They had to think about where they were. And what it led to is this environment in which, as companies sold all over the place, for the most part, the burden on sort of tax calculation, collection, and remittance was on the consumer. And they would be concerned about what we call consumer use tax. Now, and I mean, historically, many remote sellers, so if I was physically located here in Maine, where I am, and I ship things all over the place, it might be that I really didn't need to worry about sales tax all that much. The burden was on the people I'm selling it to. Now, in 2018, that all changed. So in 2018, there was a decision which basically imposed this new set of legislations, which was called economic nexus, And now we're in this world where pretty much it can be said full stop that as an e-commerce company, as I'm growing, as I'm selling into different, places, geographies, be it domestic or globally, this now matters for all e-commerce companies, big and small. And we're going to talk a bit about, how do I figure out where I need to start, and then kind of what happens from there in the rest of this webinar. But it doesn't just stop there. So we fast forward today. There's been a new set of sort of legislations in place for the last 8 years that makes this topical for any e-commerce company that's operating, in the US or abroad. But as we look at sort of the way that this industry works in 2026, it doesn't just stop at sales tax. We're going to talk a lot about sales tax today. We'll talk about sort of these tangential concepts, which are in a lot of respects just as important as calculating a tax rate. But as we think about the way that an e-commerce does business now, meets their customers where they are, sells on different channels to different geographies, can sell different products faster than ever before. When we talk about things like 1099 and W9 reporting requirements. So as you think about a strategy that's very popular these days, and if I'm looking at, influencer driven money or promotional campaigns, they have real world implications with respect to sales tax, but they also create sort of this ball of complexity around compliance, which does stretch further than just, again, am I calculating a sales tax rate at the point of checkout? We think about omni-channel. We'll talk a bit about the platforms that facilitate e-commerce. They make it easier than ever before to sell on different places, to sell on different channels, to find different customers. And a lot of the e-commerce companies I speak with, rightfully so, think that exciting, think that fun, think that as a growth lever. With that comes compliance complexity. So if we snap back 10 years ago, we're having a much different conversation. As of 8 years ago, compliance is a challenge for all e-commerce companies, small and big. And really, if we fast forward and look at the lens of 2026 and how these companies operate, it has never been more complex. And as evidenced by the last one on this list. And Christina and I recently had a couple of industry conferences. And I think we both came back and were like, did you just talk to 10 people about the implications of penny rounding in compliance and tax? And so a funny sort of topical example of, again, the list of things that an e-commerce company needs to think about, stay on top of in 2026 is never longer, it's longer than it ever has been before.
The penny thing is fascinating to me because I met with a group of CIOs in New York not too long ago, and we literally spent 15 minutes talking about how much time they spend every week in their business on how they're going to handle the rounding and what happens when the US gets rid of the penny. And a lot of them are just waiting on states to do something. I mean, it was just a crazy conversation that I had never thought of from our side of the business, but the impact that it's having on all of these sellers is unbelievable.
And I just heard time spent trying to figure out something that is not revenue generating.
Right, for a penny. And I guess it goes back to that movie. What was that? It's one penny. All of those pennies add up. So let's talk about nexus, this concept of nexus. And really what nexus is a connection to a state. And back in the day, in the old days, it used to be, it was this physical connection. Kind of like what Clayton said is, if he was an e-commerce seller out of Maine, he was only collecting tax in Maine. But the state of South Dakota kind of flipped everything on its head, and Wayfair was shipping a whole bunch of product to customers in South Dakota, and South Dakota had sent an assessment to Wayfair and said, you owe us tax on all of the shipments coming into our state. And Wayfair said, no, we don't. We don't have a physical presence there. So that made it all the way up to the Supreme Court, and the Supreme Court ruled that there is such a thing as economic nexus. And one of the things that I say an awful lot is that technology changes faster than tax law. And this is the perfect example of that, is how people are transacting business today is much different than it was 40, 50 years ago. And we didn't change the laws up until this Wayfair case to be able to accommodate that. So now we've kind of turned our e-commerce folks on their head, because before, if they were only in Maine, they only had to know the taxability of their products in Maine and only charge tax in Maine. Well, once this Supreme Court ruled on the South Dakota versus Wayfair case, all the states had lined up and had their own rule to define what economic nexus means and who should have to register there. And it's no longer having this physical presence. Now it may be based on the number of sales into a state. It may be on, and I'm going to take you to this next slide because it's quite amazing to look at, is no two states are necessarily the same. Like I was saying, it could be the number of transactions, it could be the amount of sales, it could be exempt sales, it could be gross sales. Every state is a little bit different, which to me just adds to that complexity. Now, Clayton, as a Maine e-commerce company, has to know the rules all across the United States, not just the rules of where he has to collect, but he now has to know the rules of how his product's taxed in those states. And he's got to be able to file the taxes. One of the crazy things for me about sales tax is the states rely on companies to collect on their behalf because that makes up a big portion of their revenue, but they make it as hard as humanly possible. And if these sellers do it wrong, they get penalized because the states made it hard as humanly possible. So this to me just really demonstrates the complexity of what happened with this South Dakota versus Wayfair case. And now what all of you are having to experience: when have I reached a threshold? When do I have to register? Who do I have to register with? How do I tax? Not just what rate, but the taxability of things. I think New York is a great example of clothing, right? If you're selling clothing into New York, if it's under a certain dollar amount, it's not taxable. But if it's over another dollar amount, it's taxable. How are people figuring these things out?
And
Wait, any comments and questions?
No, I just, like, I'm a visual learner and always have been. So when I look at a map like this, I'm like, oh yeah, that looks really complicated. There's 7 shades of, orange and peach and dark. And this map only represents the simplest look at understanding whether or not I need to know the rules in the state. Like, we could layer on top the product taxability, and you would see 100 different shades of the way that these states treat the sale of the same T-shirt. We have maps that show the differences in rates and rules and boundaries. You can't even look at that map. It's 10,000 different colors. I think that you'll see that consistent theme, which is it is like an inherent complexity in the subject itself, married with the fact that no two states treat this the same.
Yeah. And, something else that comes out of this is, while this is requiring people to start to collect and remit sales tax, there also is an income tax component to this. And what I'm hearing an awful lot in states like Texas and California is franchise tax. You may not have this physical connection to a state, and now you've got to collect sales tax. Now you've got these franchise tax boards communicating with the departments of revenue saying, hey, you sent us sales tax, where's our franchise tax? So when you think about a strategy for an e-commerce platform, don't forget to consider the sales tax piece, but definitely don't forget the income tax and franchise tax impact that may have as well. So let's take you to our first poll.
Perfect. Thank you, Christine. So our first poll question for the audience today is, which sales tax challenge creates the most operational risk for your business? And you'll see those that pop up on your screen right now, but we have a few different items here to select. You can select multiple, but is it A, doing it manually, B, getting help from a CPA or external advisor, C, using sales tax automation software, D, I'm not sure, or E, we're just starting to think about sales tax compliance. All right, and as a reminder, we'll have 4 different poll questions today, and to receive CPE credit, you'll need to answer at least 3. And so with that, I'll pass it back on over to Clay.
All right, we are going to talk about sales tax basics for e-commerce. So a lot of what Christine and I just touched on is like context on why this matters. How do we get here? Where do we come from? And how complicated the first step of this is. And then I think sort of a double click on like, as we unpack one thing, as we solve for one thing, there's also 2 or 3 others that we need to be cognizant of as well. And I think in the attempt to boil it down into its simplest form and talk about the 5 steps for managing sales tax, this is what they look like. And, the last slide said, hey, this is the start. Like as my teams talk with e-commerce sellers that are just getting started or have been started and are growing, or have been growing and not thought about this, we kind of just take them back and they're like, hey, like we just need a level set on, these are the 5 things that pretty much every company needs to be thinking about and likely doing. And then we get into all these sort of tangential topics on, oh yeah, well, income tax. Oh yeah, well, 1099. But if we just look at the basics, we start with where. And where is a lot of what we just talked about. It ties into this concept of nexus. I first off need to define my problem as it stands today, and then come up with a way that as I continue to grow, as I continue to sell, as I iterate on my strategies on how I run my business, how do I then track the where of tomorrow, of next week, of next month, of next year. But we always start with, where do we need to be collecting today? That harks back on this conversation.
I want to jump in there real quick because we have talked about tracking the sales and the number of sales. But one of the things that I think we forget about an awful lot of times is the marketplaces and how marketplaces impact the where. So I think of these big marketplaces where you can have them fulfill it for you and you ship your product to their warehouses. There's a physical presence. You still own that inventory that can then be moved to any one of their hundreds of warehouses across the country. So when we think of the where of managing sales tax, it's still pretty complex because I've got to look at all of these things, but now I have to take into consideration how I'm selling and whether that's being fulfilled by somebody else, but your product is in the warehouse as well. So that where piece of it is really the foundation of it all.
That's exactly right, Christine. And the where in its simplest form is, where do I sell? How much do I sell? And where am I? Where am I physically located? Where do I have sales reps? Where am I paying, sales reps? Where do I have inventory? Where do I have property? And if we think back about what we said on the second slide, this new age of e-commerce, which again, these wonderful platforms that we're going to talk about here, make it easier than ever to be an omni-channel company, right out the gate. And what that might mean to me is, awesome, I'm going to sell on a platform like Amazon. I'm going to sell on a marketplace because the barrier to entry is, again, lower than it's ever been. These technology platforms are fantastic. And we talk with companies all the time, and the train of thought goes from, awesome growth strategy, marketplace. Wait, I can send my goods to you and you can basically source them, so I can get this, hey, I order socks and they're at my door, at the end of but you're ordering, my socks, right? And it is often that the next train of thought doesn't go to tax, right? And as you do all these strategies and all these awesome things that you should be doing to grow your business, I think for good or for bad, you hopefully will leave this webinar thinking about how does that relate to compliance and what do I need to make sure that I'm aware of. Once you figure out where, which I think we've touched on is a complicated beast in and of itself, the next part is you have to register. So a lot of people that we work with think, well, I have figured out the where, and the next thing I want to do is I need to go calculate. Oh goodness, I needed to be collecting here. I'm not. What do I do? Well, I'm gonna go calculate tax. That's what I'm supposed to do. But there's a really important part in the middle there. You have to go get registered to, one of the more dangerous things that we talk to companies that are doing is calculating tax prior to being registered to do so and having no way to actually pay the money. And I see Christine Martin's face. Registration comes first. We figure out where we need to be. We go get properly licensed to be able to collect, file in, and pay tax. And then our prize for figuring those two things out is now we have to figure out how to accurately calculate when I sell my good or my service now into the state. And we're going to double click on calculation in a bit. Christine touched on it. That now means that we have to understand how the state taxes the things that we're selling. Is a shirt taxed the same way as a backpack, as the same way as a supplement, as the same way as my coffee cup here? The answer is almost always unequivocally no.
No, the answer is almost always depends.
Well, depends.
That's my answer for everything. Depends.
We could do a webinar that is called Depends. Maybe that's a part of this next series, Christine. And we'll touch a bit more on why Depends becomes so complicated. But it's product taxability, it's rate, it's rule, it's boundary, it's wildly complex. And now there's this opposite side to sometimes you will find, if it's omni-channel, if it's a different, there are instances in which you don't need to collect tax for good reason. That could be I'm selling something that someone is going to resale. I'm selling to an entity that can claim tax exemption. I'm selling on a marketplace, back to marketplace. While I might not be responsible for the collection and calculation of tax, I'm responsible for tracking how much I sold, because oftentimes that finds its way into a return that I need to file. And after you do all of this correctly, you have to make sure that you understand, again, what form do I fill out? What does it look like? What information does it require state by state? It depends, and it always looks a little different. But on some cadence that the state will dictate, you now need to aggregate all this information down, file on time, pay the states, and make sure if the states have any questions subsequent to your filing, that you have the understanding of how to answer those questions. And so I think about linking all these things together, and I've called it over the years, like, how do you make sure you have continuity of compliance? Because if one of these things gets out of whack, you're spending tons of time, inevitably to do it wrong, which is it's the most costly thing. So where do I need to be? How do I register to get there? How do I calculate tax? How, when I don't calculate tax, do I track and have the appropriate documentation? And at the end of the day, how do I make sure the states get the money, that they are requiring you to calculate and file?
And I want to pause on this remit piece of it for a second, because here is the really important piece, is states are looking at businesses to act on their behalf. And when you register your business with the state, you have to list who your corporate officers are. And what that means is if you collect tax and you don't remit it, they go after the corporate officers personally. So corporate officers are held personally liable because this tax is actually being held in trust, if you will, that says, hey, you're going to collect it on our behalf and you have to report it. So Clayton had mentioned before that you don't want to collect before you're registered, because if you don't have a mechanism to report this tax to a jurisdiction, you could get your officers in an awful lot of trouble. There's a whole bunch of articles in the news, in newspapers. I've shared some internally of executives that have actually gone to jail because they've collected tax and not reported it. It's called unjust enrichment. So to me, the most important piece is if you've collected it from your customers, please have a way to report that tax. And this whole process, these 5 steps, it's so important for personal liability. But this registration piece of this, I don't think we've touched on the complication of the registration piece. I think of states like Florida. You register in the state of Florida, great. But if you go to register in Alabama, Alabama's a little bit more complicated because you may have to register with the city of Mobile and the state of Alabama and this other third party that's collecting a whole bunch of local taxes. So registration isn't as simple as, oh, I'm just going to register with the state. To my word, depends. A lot of those registrations depend on the state and how they administer these sales taxes. And so that remittance piece, to me, I just cannot preach enough on how important it is that you remit everything that you collect.
No, it's a really good point, Christine. And I mean, in any of these sequence of events, if you don't pay attention and understand how complicated registering is, and you do it wrong, or you do it incomplete, or you do it in some places, but not in all the places, to the Alabama example, none of the rest is going to get done correctly. Yeah. And that's the hardest part about this, is like, it's a sequence of events. It all links. And if there's a broken chain, you know, you're spending money, you're spending time, you're spending energy and effort, and still putting, you know, the business at some sort of compliance risk.
It's kind of this waterfall, right? It starts at understanding and then ends at you've remitted this tax. But we didn't touch on this exemption piece. And you mentioned something that was pretty important about spending money. And if we think about, especially here in the United States, is we have this concept of exemptions, that this tax applies to the end consumer. So what that means, you as a reseller, if you're not making those items, you're buying them from other vendors, you shouldn't be paying tax on the items that you're buying because you're reselling it and charging the consumer things. So there are things that you can do to minimize your cost, and which then impacts your margins as well, is make sure that you've got the ability to issue resale certificates to your vendors. And then likewise, you may have some customers that are tax exempt because they're reselling your products. You've got to have some methodology to collect those exemption certificates and keep them. And I'll give you a great example. I used to work for a hotel chain, and we had people that came in and stayed that were exempt, and we would get all of the proper documentation, but 4 years later, a state would come in and audit us. We got audited every 4 years constantly. And the auditor would look and see, hey, you didn't charge tax to this one guest. Show me the documentation as to why you didn't charge them tax. And I would call the hotel, and you're like, do you remember that one guy that stayed for one night 4 years ago? I need that documentation. And the hotel is usually like, I don't know what I did with it. So this concept of not charging somebody tax because they're tax exempt, whether they're a government, a diplomat, or a reseller, how are you holding on to that documentation so that you can find it 4 years later? So an important piece to think of as well.
Exactly right. And I think we'll double click on some of these concepts here in a minute. So we're gonna move to the next slide. And again, it kind of harks back to like these incredible technologies that, you know, enable companies to start in e-commerce, to grow fast, and to do, you know, really wonderful things, you know, easily. And that's some of the platforms that we have here up on the screen. And they're going to help you, you know, set up your storefronts, manage product listings, process orders, integrate with fulfillment and shipping tools, you know, start out selling omni-channel rather than omni-channel being something that is reserved only for large companies. And the other thing, the other commonality that these platforms list, as well as about 1,000 others plus, is they're partners with Avalara. Because one thing that, you know, a native platform struggles to do without the assistance of some third-party application like Avalara's is help companies that sell through these platforms do exactly what we were just describing. There's an educational component of it that is just, it's so tax specific. It's the where, it's the registration. And then there's the second component to it where once we solve the equation of what we need to be doing, but how the heck do we do it? Calculate correctly, store documentations, file pay on time. To Christine's point, make sure that we can provide evidence 4 years down the line of what we did 4 years previously to support an audit. And again, specific to e-commerce, it's like I can grow, I can sell to anybody at any time, I have these awesome growth strategies that that are made easier by these technology platforms. And I think the through line here is, you know, every single one of those likely has some sort of tax implication, compliance implication as well.
So let's keep going into the basics. I mean, we have certainly talked about the where, right? Where do you have a presence to collect? And again, I know we've talked about this, but understanding how you're selling, Is it just through e-com? Are you selling through marketplaces? If you're selling through marketplaces, are you shipping your product that you still own to these warehouses? So make sure that you understand those. But here's the important piece, and probably just as complex, is you've got to monitor the changes that states throw out there. So every single year, we keep track of what's happening in every single state. We're monitoring legislation. We're monitoring private letter rulings that come out to help our customers understand where they might need to register and how things are taxable. So I think it's really important to monitor a few things. One, not just who you're selling to, but your company itself. Where do you have employees? Because as we've seen, these companies may start off kind of small. I mean, there's a company that I see that sells these sweatsuits, and they started out pretty small through influencer channels like TikTok and Facebook. And now they've exploded and they're at $10 million a month in sales, but they've also expanded their business to include warehouses across the country. So I think it's important that every single year, a couple times a year, you look at your business. Where do we have payroll? Because that payroll gives you a physical presence in a state, and you may have to register to begin collecting. Look at where you have warehouses. Maybe you have opened more warehouses, because that gives you that presence. So there's so many things that can trigger this concept of needing to collect tax, that I think it's so important that when you're looking at financial statements and you're reviewing your business plan every single year, to take these things into consideration as well. If you're going to consider opening up a new storefront, there are all kinds of licenses and permits that come in with opening those storefronts that may be a little bit different than what you were experiencing through e-commerce. So I really think this importance of looking at your company's strategy and looking at your company as a whole, and how sales tax, the not super sexy tax that everybody thinks about, but it has such an impact on the bottom line and the health of your organization as well. So as you look at your strategy and build out your strategy, keep all of these things in mind of when you would trigger a need to calculate tax, when you would trigger this need to register, how you're going to calculate that tax, and how are you going to remit it, keeping in line with those 5 points that we had up on the screen earlier.
And I'll just add, Christina, I love this line at the end, because I think in the world of sales tax, there's sometimes where we do, something that kind of seems like overt in, it's like, oh, I open a store in a different state that I'm not in. Like, I might need to think about sales tax. But what I just said was basically like, for e-commerce specifically, oftentimes sales tax is triggered by growth, not intent. Yeah. And like, if I'm a construction company and it's like, hey, I'm thinking about picking up a project in California, we don't do business there. Logically, part of what I might think about is permitting and compliance and how do I get there. We talk with companies all the time where they just grew and they grew. And maybe they didn't do anything fundamentally different, but maybe they were just executing on their growth strategy. And they call us and they say, hey, someone said I should probably care about this. And the trickiest thing, the hardest conversation is when we find out that, yes, you should have cared about this 3 years ago, because then we have a bit of a different conversation.
One of the other things that I've heard, and this has been a big topic lately, is around mergers and acquisitions. I talked with a prospect last week that said, hey, we're pretty sure that we've done this correct in the past, but we know that we've triggered some reason to start collecting, and I need to get control of this now because our plan is to sell our business in a year. And we don't want our sale or our merger or investments to be hindered because we didn't have the sales tax stuff right. So again, if the strategy is an exit strategy, make sure you've got sales tax correct. We've also talked with customers that tried to sell their business and people wouldn't invest, people wouldn't buy because they had this huge tax liability that's out there. Or they've sold their business and part of due diligence found that they owed $1 million in sales tax, and that $1 million was withheld from the sale price. and the buyer actually kept that $1 million to take care of this sales tax. So when I think of strategy to me isn't just how are we going to grow, but what is our plan in the future to get more investment money, to sell our business, to buy businesses. That has an impact on it as well. Which takes us to poll number 2.
Absolutely, yes. Okay, so the question that we have for the audience today, the second question here is, which of these sales tax challenges is most difficult for your business today? Is it A, knowing when and where we're required to collect sales tax? Is it B, understanding reporting rules when tax isn't collected? C, managing compliance across multiple states and channels? D, keeping up with changing rules and requirements? Or E, I'm not sure where our biggest risk is. You can select multiple here.
And should have all of the above. There should be an F, all of the above.
Go ahead and select all the ones that pertain to you. Absolutely. And then, a friendly reminder, if you have questions for the speakers today, feel free to use that Q&A channel. Add in your questions. We'll have some time at the end for questions. All right, and I believe we're on to this next segment, starting with you, Clay.
Yeah, so we're going to touch on key challenges for growing sellers. And I think, if you sense that there are some things that are sort of repetitive in nature, it's because that's by design, right? These are the things that we talk about, every single day with companies like yours. And for the most part, it's the same core things that we want to make sure that everybody understands about. So, we talked about the where and the registration, and we're going to double click on some of the challenges as to what comes next when a company, that is growing inevitably finds out, hey, I need to be in handful of states, 10 states, 15 states, on up. And that's the step that comes after registration, which is how do I figure out and ensure that I'm accurately calculating tax? And now, again, we're doing this tax webinar through the lens of e-commerce because things like calculation are disproportionately more challenging in the world of e-com, because everybody in e-com cares so deeply, as they should, about this magical moment of commerce, checkout. It could be anybody from anywhere. That's a beauty of the growth strategy in e-com. But that also means that at that moment in time, it needs to be correct. It's really, really hard and really disruptive after the fact to go back and say, hey, whoopsie daisy, customer, I need to tack on 3%. Or to have your customer call you and say, I know that, I'm purchasing this item in this state and I shouldn't have been charged tax, and you did. So how does that sort of manifest itself? Well, we talked a bit about having to understand what it is that you sell. Christine mentioned, for clothing, there are threshold rules in states like New York and Massachusetts where you not only need to know what you sell, but you need to know how much it is. Because how much it is will dictate whether or not it's taxable, in a jurisdiction in New York or Massachusetts. You may need to know that specific to periods of time. So we talk about sales tax holidays. There are times in these different states in which a grouping of products are non-taxable for a week or a day or a period of time. And, outside of that period of time, they're back to taxable. So you layer over the complexity of what am I selling, when am I selling it, to both who am I selling it to and where am I selling it. And then we get into 13,000 different permutations of rates, rules, and boundaries that tell me, do I need to charge 8.25 or 4.5? And by now you probably also understand that I can't just also say that and have it be like, yeah, that's just static. You need to go figure out the 13,000, rate, rule, and boundary, and it's not going to change tomorrow. It changes every month. So the challenge now, once you figured out of where I need to be, is how at this magical moment of commerce in live time, when it's not like I'm issuing an invoice out to one of my 10 customers that I do business with in their 10 locations that I know very well, how do I make sure that if someone checks out, immediately I know who they are. Do I need to collect in that state? If so, do they tax what I'm selling? If they do, do they tax it in this period of time? And oh, by the way, if you figured all that out, then you got to figure out what one of the 13,000 combinations of rates, rule, and boundary is specific to that address, to that rooftop.
And I want to touch on this boundary piece of things in these jurisdictions. I used to live in Georgia. Swanee, Georgia 30024 is in 3 different counties with 3 different rates. So how do you figure out which one you should charge tax on? The taxability in Georgia doesn't necessarily change, but the rate certainly does, which then creates those potential issues down the line. So these jurisdictional boundaries, Georgia's fairly easy, even with 3 counties for 1 zip code. But if I were to show you a map of Alabama and the craziness that happens in Alabama, your mind would spin, because it's not a zip code based thing, these tax boundaries. And Clayton, you mentioned sales tax holidays. Think about back to school holidays. People go shopping because they're not going to be charged tax. Think of abandoned shopping carts. You may have a customer experience issue if you're charging tax and they know those things shouldn't be taxed. So sales tax holidays become a thing, and could potentially reduce, as long as you're taxing it correctly, could reduce your drop shopping cart pieces. So sales tax holidays around back to school and hurricane preparedness are the 2 holidays that I think about and hear about often.
Absolutely right, Christine.
Let's talk about exemption certificates and exempt sales. And I had mentioned these earlier when we were talking about the 5 pillars of compliance and this managing of exemption certificates. And to me, there's 2 sides of this. There is your side as an e-commerce platform of buying things that you're turning around and reselling. Remember, here in the United States, sales tax is on the final consumer. So you may not want to be paying tax to your vendors, because 1, that's going to increase your cost and reduce your profitability. So how do you give those exemption certificates to your vendors? Well, that's through this registration process, right? But then you also have to have this mechanism if you have a customer base that may be tax exempt, whether that's governments, nonprofits, diplomats, people that are reselling, people that are using your product in agriculture or manufacturing. How are you collecting this? And again, I think of this almost as a customer service piece as well. If I am a customer buying from you and you charge me tax, and then I've got to call you and say, hey, can you refund the tax? It's a customer service issue, but it's also a time for you. Now you've got customer service that's taking their time answering phone calls around exemption certificates, and maybe you're refunding the tax back to your customer because now you realize that they're tax exempt. Well, you're also being charged for that credit card refund that you're processing as well. So exempt sales, who are you selling to? Are they tax exempt? How are you collecting documentation? In a lot of platforms, you can check a box and mark somebody as tax exempt, but do you have the documentation so that 4 years from now, you don't have to say, hey, what did I do with that 1 piece of paper? Because I need to find it now. So if I were to talk about what should you do with exemption certificates, 1, monitor those bills that you're getting from your vendors and making sure that you're not paying tax on things that you're reselling. 2, make sure that you're collecting exemption certificates, not just flagging a customer as exempt without backup documentation, but have a place that you can store those images and that you can find them many years from now. But secondarily, especially if your customers are recurring customers, make sure you have a mechanism to refresh those certificates. Florida resale certificates expire December 31st of every year. So you may have a customer that's reselling your product. They buy from you for the first time on December 12th. They give you that Florida resale certificate. A couple weeks later, that certificate has expired and you need to get a new one. So have a process. I think standard operating procedures are so important, and this becomes part of it. Make sure that the tax piece of it is part of your SOPs. Have a place to collect them, have a place to store them, have a way to refresh them, and have a place to find them when you need them. So what does exempt or tax-free mean? I've already talked about those, right? Maybe you're selling to charitable organizations, nonprofit organizations, government, religious organizations. I'm going to take you back to nonprofit organizations. There are some states that do not exempt nonprofits from sales tax. So just because you get a letter that says, hey, I'm a 501c3, I'm tax exempt, make sure that you're not shipping to Louisiana, because Louisiana says, no, you're still going to pay some tax for us. But on the flip side of things, if you happen to be a nonprofit, that just means that your purchases are non-taxable. But if you're selling things, you still have to charge tax on those things that you're selling. So maybe your purchases are tax exempt, and you need to be able to give that information and certificates to your vendors. So these rules vary by state. My answer for everything is it depends. When are nonprofits not tax exempt? Depends on the state. Make sure that you've got some way to validate that you've got these exemption certificates and that they're valid and complete. Are they issued to you? Are they signed? Are they dated? Do they have an exempt reason on them? I worked for a paper manufacturer for a number of years. I had a Georgia auditor come in and he had said, hey, I need to see the exemption certificates for these customers. And I didn't have a solution. I dug through boxes. I called our plants and said, I need to see these certificates. And I was so happy that I found this 4x6 card and I gave it to the auditor, and I was watching him look at these certificates and he put that one to the side. And I said, wait a minute, what are you doing? And he said, well, look at this. This certificate was issued to a different company. Well, we had changed our name 3 times. So he disallowed that exemption certificate because it wasn't issued to our company name. So things like that can create some issues when it comes to exemption certificates. But now we're kind of getting to the end of things, right? We've figured out where we need to register. We've registered, we've started calculating tax. We've got a process for managing exemption certificates. What do I do with all of this money? Well, again, it's super important that that money gets paid to a jurisdiction. What you've collected has to be reported. And you've got to file everywhere that you've collected this tax. It is not yours to keep. So here's the hard part, right? This is where I say that states have said, you're going to do this on our behalf, but we're going to make it as hard as humanly possible so that if you make a mistake, we're going to penalize you because we made it hard for you. Not every single state has the same filing deadline for sales tax. It's not like income tax where April 15th is the big day. Every state's a little bit different. The state of Washington may be the 25th of the month. Florida's the 20th a month. Unless you pay electronically, then it has to be submitted by the 18th of the month. So when I start to think about the importance of things is not only do you need to register, but you need to know the filing frequency that you're going to pay those. And you need to know the date that those are due and how you're going to file them. There's states like Alabama that no longer accept paper returns. So how are you going to go about filing that return with the state of Alabama? And when is it due? Does it have to be filed by this date, but the payment has to be initiated earlier if it's an ACH debit or an ACH credit? Can you pay by credit card? All of those things need to be kept in mind because in states like Florida, if you are a minute past the deadline when you file and pay your return, there's a 10% penalty, 10% per month, up to 50% for the state of Florida. So it's not as simple as just every single month I'm going to pay. Make sure that you're following the rules of the state. Is it monthly? Is it quarterly? Do you have to make prepayments? Some states require large taxpayers to make prepayments. I'm going to give you a little bonus here. The state of Texas is one of the only states in the country that you can voluntarily make prepayments. And if you do, they give you an extra 1.25% discount. So to me, the moral of that story is if you're a large taxpayer in the state of Texas, think about making some prepayments.
Wonderful. Thank you, Christine. And we are on to our third poll question for today. The question is, what's the hardest part of the sales tax filing process as your e-commerce business grows? Is it A, tracking different filing deadlines across states? B, managing varying filing rules and payment methods. C, keeping up with changing filing frequencies and prepayments. Or D, making sure everything is filed accurately and on time. Give you all a moment to select, and you can select multiple for this one as well.
We should throw in reconciliation in here because this what's in the general ledger as sales tax payable and what's on the return is a pretty important piece too.
Oh, yeah, definitely. Yeah, definitely put that in the Q&A section or the attendee chat. We would love to see your feedback. So Christine, I believe you're on to this next segment as well, so I'll pass it on back over to you.
Excellent. Let's talk about how automation can increase your growth. We have talked about how do you track where you've created this obligation to register. We've talked about the complexity of the taxability of the items and the tax rates and the jurisdictional boundaries. This is the beauty of automation, right? You've got this ability to, at a high level, see all of your transactions, the number of transactions, the total sales in states. So you're not having to run reports and do those things. If you've got this place that you can see all of it, you don't have to know when rates change, when boundaries change, when rules change. That is the beauty of automation. So as your company grows and you've automated, you don't have to hire more people. You don't have to have more resources or pay consultants to be able to do that. That is the automation piece right there. It all comes into play and it allows you to scale your business without increasing your headcount to accommodate all of those. This gives you a place to store exemption certificates, sell through marketplaces, add products that you're going to sell without understanding the taxability of those products all across the country and even outside the United States as well. Automation makes this easier to do without increasing headcount. Clay, you want to talk about this and how it increases this complexity?
Yeah, and I think, and we'll boogie here and I think we're going to probably run out of time for Q&A.
I know.
So I will promise, anytime you get Christina and I on a webinar and we passionately talk about our love of tax, we're apt to run out of time. But for any questions that are in, we will follow up individually and get them answered. But just generally, and I know we've talked a lot of this, there are activities intrinsic to the e-commerce seller, which makes something that is so complex for any company doing business inherently more complex for a company that does e-com. It's the way that I sell. It's the way that I grow. It's many of these things that I think about as growth levers, as growth strategies that fundamentally impact tax. We'll get into some promotional giveaways. You might think, hey, I'm just giving something away. There can't be a tax implication if I'm giving something away. Well, not only is there
our webinar right there on promotional giveaways.
That's our podcast, Christine called It Depends. But yeah, promotional giveaways, you'll find that actually there's a tax implication on you because the state isn't going to say, hey, great, I'm good with the fact that you just gave it away. I don't want my tax. It's, hey, great, you gave it away. Now you need to self-report the tax that would have been charged had you not given it away. So we're just kind of wrapping things up here. Being in the business of e-com makes this more complicated than it already is.
And we've talked about adding products increases the complexity. I think about the company that sells sweatsuits that also now sells luggage and blankets that are taxed completely different. And this is really the beauty of automation is I don't have to know where it's taxed and how it's taxed and at what rate it's taxed. I can check boxes and taxes systematically applied.
And I will just say on that, if there's any company out there that's selling supplements, just call us because we got an hour worth of things to talk about, about how supplements are taxed.
Clay, we could literally do hour sessions around promotional giveaways and supplements. Just those things alone are some fun and interesting topics. At least I think so. So I had mentioned this multi-state filing challenge of understanding when you have to make prepayments, how to calculate those prepayments. If you don't make the right prepayment, states penalize you because they made it hard as humanly possible. Understand that filing frequencies may vary by state and they may change. The forms may be different as well, and how you file, whether it's a paper return or an electronic return. If it's a paper return, does it have to be postmarked or received by the due date? All of these things impact your ability to scale, grow, remain compliant, and remain viable.
So, and this might look like one of the original ones where we talked about the 5 steps in sales tax, and I would submit that these are the 5 things that are important to do in sales tax, and they can manifest themselves in every little part. If it's where, if it's register, if it's calculate, if it's track, if it's remit, you have to do it accurately. Like if you don't do it accurately, you're spending time, energy, effort, or paying somebody money that at the end of the day it won't matter in the event of an audit in 4 years. You got to do it efficiently. Like companies we speak with all the time, they want to run lean, they want to grow without adding headcount. How do you do all this crazy stuff efficiently? 2 sides to the coin on doing this wrong. One is a customer experience. Christine talked about it. If you're overcharging a customer, you're talking about a customer that's not happy, you're talking about 4 phone calls, you're talking about trying to figure out how to do a partial tax only credit back. You're talking about hours and hours and hours spent a week talking with unhappy customers. On the flip side, if you're not charging enough or you don't have a certificate, you are accruing risk to your company. And the scary thing about tax is if you're doing it manually, if you're doing it cheaply, if you're not doing it at all, the risk only shows up years down the line when someone comes and asks about what have you been doing for the last 4 years. And it's all about scalable growth. Like we talk to a lot of companies and they're like, hey, we wanted to enter this market or we wanted to sell this product, but we're worried about sales tax hindering growth. Like that can't happen. We got a lot of solutions. We talked about a lot of problems. We talked a lot about sort of scary things. Like that's what Avalara is here to do, to help you understand, like hopefully you've done in these last 57 minutes, where do I start? How do I automatically calculate product taxability, rate, rule, and boundary? How do I automatically file and pay on time every time? How do I manage certificates that are lovely from a customer experience perspective, that support on an audit in 4 years? Avalara was founded to support exactly this conversation, e-commerce growth without tax hindrance. What's next in the series? So we are, this is a 4-part series. And again, it is designed around everything, e-com and tax. So you learn a bit about the e-commerce sales tax basics for growing online. We will talk about additional needs that as a company grows, these things become more important, more impactful. We'll do a completely separate thing on scaling and omnichannel. And we'll talk about as a company grows, as it really does, double click on these omni-channel strategies. How does that impact tax? And then we'll talk about real world challenges, like practical scenarios and common pitfalls of companies we speak with every day, every week.
Thank you, Clay. And for our last poll question here, we'd love to just be here for everybody in attendance today. And so this is an opportunity. If you'd like to hear from an Avalara expert, feel free to input your answer here. And we're at the top of the hour. And so as Clay mentioned, we're not able to do some of the Q&A that we had planned, but we will be following up with you via email afterwards. And so if you still have a question for our presenters today, I encourage you to submit those. And also a friendly reminder that if you did answer at least 3 of the poll questions today, then you are eligible for CPE credit. And so you should be able to download that certificate now. With that, thank you so much to our presenters today. And thank you for everybody in attendance. I hope you all have a great rest of your day.